It's 1:30 p.m. in Lagos, same time in London. We're bringing you markets, insights, and analysis on Business Incorporated, live from Channels Television. Here's what's coming up. African Central Bank set to hold interest rates amid economic uncertainties. Egypt and France agree on joint efforts to confront food and energy crisis. And South Africa calls for increased and diversified exports to Vietnam. Welcome to the program. I'm Will Ibang. Let's kick off with the markets. First up, major equities in Africa, where we see mixed sentiment at intraday. The Nigeria's NGX was down at intraday 0.18%, nearly 0.2% there, while South Africa traded in the opposite direction, 0.41% up. Egypt, however, let's see how they traded yesterday, which was closed today for the week. It's in green territory. We see that closed for Egypt, while Nairobi Securities Exchange and the Thursday session also in green territory. Let's go over to the Middle East. Let's see how they did at intraday. Most major equities were closed on Thursday, except in the UAE, where equities were trading mixed. Also at intraday, the Abu Dhabi index up marginally, 0.01%. Dubai, however, in negative territory, 0.06%, albeit marginal as well. Let's see how Saudi and Qatari indexes closed yesterday. 0.29% for Saudi and Qatari index down almost 0.5%. Now, within a few short years, US-based Tesla has become the most valuable car company in the world, easily leaving behind Detroit's Big Three, as well as international competitors. Now, the company says it's developed a technology that could disrupt the auto industry. Lars Alter with Deutsche Welle in Berlin has been following the story. Lars, what can you tell us about Tesla's invention?
Yeah, hello, Will. Thanks for having me. The new technology is called gigacasting. That's a very Tesla name. Just think gigafactory. But it seems to really deserve the title. Here's what's going on. Tesla apparently found a way to mold the front and rear structures of its Model Y in one giant press, as well as all of the complex underbody of an electric car as well. Now, for reference, usually the front and back of a car do consist of several sheets of metal that have to be put together. As for the underbody, that is usually made out of about 400 parts in a conventional car. Tesla says it can mold it out of one metal sheet in a giant press that applies between 6,000 and 9,000 tons of clamping pressure. That's an insane machine, and it would help the company halve production costs for any of their vehicles by saving on materials, on manpower, and certainly on time. Now, at the same time, Tesla has changed its design and manufacturing techniques as well, once again, with the goal of saving time. Tesla, according to sources within the company, is apparently ready to develop a new car from the ground up in 18 to 24 months, while traditional car makers can currently take anywhere from 3 to 4 years.
But why have established car companies not done this before?
But when it comes to designing cars, established firms seem to just be set in their ways. I guess that's a difference from a startup then. And Tesla, even though it is by now the most valuable car company in the world, still has that startup feel to it. And that's due to CEO Elon Musk himself, most insane, and he's obviously wreaked havoc at Twitter and in so many other ways, but he still seems to be a kind of genius who dares to think outside the box and try out new things, take a risk. Now, as for those gigacasts, those giant presses Tesla uses to mold a car, those have been dismissed by other car companies as too expensive. The problem, once a mold is forged, it is nearly impossible to make any adjustments. But adjustments need to be made when developing a model, mostly to figure out aerodynamics or noise reduction or so. But to make these changes then is cost prohibitive. However, Tesla seems to be able to use industrial sand and 3D printing technology to make its models and adjust them on the cheap, all before forging the final mold. So there's quite a bit of ingenuity there, and it could be worth a ton. After all, the price of a car is a major selling point for most customers. And if Tesla can cut production costs by half and come to a much lower price tag, that will absolutely disrupt the car industry.
Exciting days ahead for Tesla there, but we can't leave this without talking about the market sellers. What are investors looking at in today's markets?
Now, all week, investors were waiting on interest rate news, and yesterday, finally, the European Central Bank made their decision, raising the interest rate by another quarter point. It's the 10th interest rate in a long series, and it's likely the last one, at least according to most analysts. The market is seeing that as good news. Reaching an interest rate plateau would give markets some stability and obviously point to inflation pressures going down. As for other markets, we got some pretty good data out of China in the morning, which gave a boost to Asian markets, and that has encouraged investors in Europe too. So things are looking pretty good for the day.
Thanks a lot, Lars, for that update. Now we'll move over to the US, where stock futures ticked up on Friday early today after markets rallied on the back of the latest IPO debut. Futures tied to the Dow Jones Industrial Average added 0.25%. We see the S&P 500 also adding 0.12%. And NASDAQ futures, however, were off 0.08%. Adobe fell 1.68% in extended trading, even after posting better than expected quarterly results. Lena edged down 0.6%. Despite a top and bottom line beat. The newly debuted ARM Holdings added nearly 7% in after-hours action. But let's hear more from what happened yesterday with Maria Bird.
The U.S. stock market popped up on Thursday as the Dow Jones was up almost 1%, up 0.96%. And the S&P 500 was up at 0.84%. And the heavy tech NASDAQ was up at 0.81%. Many investors are hopeful that the Federal Reserve will continue to hold out on interest rate hikes as the economy seems to be resilient. U.S. retail sales reported a high that was not expected for the month of August. It is also clear that many investors are watching to see how things will end up in the U.S. economy moving forward for the next weeks and days ahead. As the stock market shows some sign of resiliency, this could mean that inflation is on its way down despite what we're seeing and much of the reporting over the last few days.
Thanks, Maria. Now, last week, the first ever Africa Climate Summit was held in Nairobi, Kenya, and we're going to be teasing out some of the key highlights and outcomes of the summit, especially with regards to renewed commitments. Chinan Dikwo, Vice Chair, African Energy Council, joins us virtually from Doha, Qatar. Chinan, it's good to have you on the program again. Can you tell us what were the key highlights and outcomes, especially with regards to commitments and initiatives to address climate change and also promote sustainability?
Absolutely, Will. Thanks so much for having me. So just to outline, this is the inaugural climate summit that's happening on the continent. In the past, much of the summits were the global ones, so the COP ones, which Africa would participate in. But for the very first time, Africa is hosting its own Africa Climate Summit to take a position. And you asked about the highlights. One of the big things that's come out of that is what we call the Nairobi Declaration. The Nairobi Declaration is the position paper, is Africa's position in terms of its climate position, and it's what's taking into all negotiations going forward. Now, many people recognize that the next couple of months is a very busy season for negotiation in terms of the climate, but also economics and all of that. So coming out of this, there was obviously very clearly the G20 summit. Africa had a united position because of this declaration. There was also the United Nations General Assembly that's happening next week. Again, the Nairobi Declaration and that paper would assist with that. There are annual general meetings for the World Bank, for IMF, all of these coming up and will allow Africa to have a very united position. Now, to the question, what's in that declaration? So in that declaration, Africa is saying very, very clearly that one, we need funding for climate mitigation, for climate adaptation. And of course, it made several pledges around climate action and infrastructure and all of that as well. It was really, overall, a really successful summit. Some of the highlights, I'd say, so some of the things that happened, about 26 billion of total pledges of investment into climate funds. I think notably, the UAE gave about 4.5 billion of non-binding letter of intent, towards clean energy, about 450, again, from the UAE, 450 million from the UAE for carbon credits. Denmark gave about 250 million to the Green Climate Fund. The United States, Canada, Finland, Germany. I mean, many countries put a lot of money on the table. But the fundamental thing is, in the past, we've seen a lot of pledges, very little realization. So the hope is that this time around, it would be different.
But Chinan, just tell me, you talked about the Nairobi Declaration, yeah. So, but how does this declaration, with its focus on global carbon taxation, financial system reforms, we have debt relief, how does it contribute to Africa's position and strategy in the international climate negotiations, specifically in the context of the upcoming G20, the COP28 that we're expecting, to happen?
That's a great question, Will. So just to lay this out, in the past, Africa didn't have a united position on here. Every country would go and negotiate on its own. Today, we have a united front. Africa has a united front doing that through a Nairobi Declaration. Now, what does that say? What does the declaration say? In the declaration, Africa has taken a very clear position with regards to what it wants and how it wants its climate investment, how it wants its climate projects to be funded. So there are key things there around debt relief, which we're seeing, so asking very clearly for debt relief. There are clear things around climate financing, how do you get that done? There are clear instruments in there around setting up carbon markets to help finance, the renewable energy systems that we're seeing in Africa. So to that point, the declaration brings a huge amount of clarity, and ahead of COP28 and the other ones I mentioned, like the United Nations General Assembly is happening next week, Africa would have a very united front when it sits across the table with all of the countries and it tries to negotiate clear positions around investment, solid minerals, and how all of those flow into the energy transition.
So can you elaborate more on the concerns raised by some of the groups at the summit? I know this is a big issue in terms of climate finance and the green growth at the summit. The risk of greenwashing with talk of commodification of Africa's natural resources. How are these concerns, how are they addressed at the summit?
That's a great question. So, Will, you would know this really well. Over the last few months, over the last few years, there've been a lot of talk, particularly from some of the East African states. Let's say sort of around Kenya, around the fact that the global financing system, the finance architecture of the world is a bit unkind and unfair to Africa. There've been all of those discussions. Now, ultimately, what that means here is that lots of these countries are calling for a complete overhaul of the entire system, asking that it has to be fair. Loan concessions have to be done in such a way that it makes sense and is kinder to the African continent. We don't have punitive interest rates as we've seen in the past. Just to outline this here, actually. So many of the multilaterals that lend into Africa, the interest rates are about 8 times that of developed countries, which is completely unfair. So in the Nairobi Declaration, and some of the concerns that people have been saying, is around saying, well, hang on, we have to open up these concessions to make sure they're a lot more fair to African countries and not punitive.
Speaking of fair, well, what role did the private sector capital and innovative financial instruments play in these discussions at the summit? We do know that we need to catalyze investments, reduce debt burdens, and promote sustainability. How did private sector play a role in these discussions to enhance this sustainability?
Absolutely. So this has been a massive catalyst. So just to lay it out again, the summit had about 30,000 delegates. Over a period of 3 days, there were 20 heads of states, who attended, including the UN Secretary General, Antonio Guterres. Sorry, I'm going to answer your question, but I want to set the scene here, including the President of the EU. Now, to your point about private companies, there were 30,000 delegates, much of these coming from private institutions. And they participated in a lot of discussion and framing the overall position and question for Africa. They've also made a huge amount of commitments. So to give you an example, the Jeff Bezos Foundation, also put money on the table, and several small African funds also put money on the table, particularly around climate mitigation, climate adaptation, climate action, and infrastructure. And what we're starting to see, actually, mainly around Kenya, but also perhaps towards West Africa, around Nigeria, is we're starting to see small startups that are coming up with clever, innovative systems, ideas that allow for mitigation and adaptation in a big way. Now, lots of these need funding, and the work here is to try to match these startups with the required funding and to make that happen.
Thank you so much, Chinan Dikwa, Vice Chair, African Energy Council, for those insights. We do hope this is not just another talk shop, but more action we put in place to ensure this happens. Thank you so much for joining us on Business Incorporated.
Thank you.
Now, more to come. Can Africa accelerate its rural electrification plans? That conversation next. Stay tuned. This is Business Incorporated. Welcome back. Now, still on climate sustainability, we see the mini-grid space continues to attract a lot of attention from development partners in Africa, and commitments are being made to fast-track climate-resilient economic growth in rural sub-Saharan Africa. Also, Husk Power Systems have announced the Africa Sunshot initiative with a goal of having 2,500 net zero mini-grids operating in off-grid and weak grid communities in the region within 5 years. Olu Arike, Nigeria Country Director, Husk, joins us. Good afternoon, Olu. It's good to have you on the program.
Good afternoon, and thank you for having me.
So why is this important? Why are private sector players, why are private sector mini-grids key to ensuring 100% electrification of rural Africa?
Well, we've just had a recent event 2 nights ago where our national grid once again failed. It hadn't failed for over a year. But that was a reminder that decentralization and central grids, decentralization, albeit the failure with central grids across sub-Saharan Africa, has to be the way to go. Given that we are a huge diesel generation economy, it is quite expensive and polluting, and we are still leaving over 600 million of our people without electricity. The World Bank and the IEA have continued to unequivocally mention that mini-grids are the most cost-effective solution for addressing this huge gap that our people in rural areas continue to have. And without going this way, we would continue to hold back our people and our country from achieving true economic potential. So therefore, private sector mini-grids are the most cost-effective way for ensuring that we electrify all of rural Africa and allow them to achieve true economic potential.
So where are we at today in terms of the mini-grid industry in Africa? What progress have we made?
I mean, we are really way off track. SDG 7, which is the goal essentially dedicated to achieving universal energy access, and what we need to continue to do, we are still off track. But the mini-grid industry has been identified as the key solution for us to achieve SDG 7. But we are still off track, right? Industry and the mini-grid space needs to essentially begin to look at how to scale 10x, not 1x, not 2x, not 5x, but 10x. And we will need to power over 300 million people in sub-Saharan Africa by 2030. This will require over 150,000 mini-grids at a total cost of over 90 billion. That is a lot, looking at those numbers. And at our current pace, only about maybe 10 to 12, 15,000 new mini-grids can be constructed to electrify just 40 million people, where we have over 600 million people without power. Without that intentionality of trying to drive scale by 10x at least, then we'll still have a problem in our hands with a lot of our brothers and sisters around sub-Saharan Africa still without power. This is why Husk has also announced our Sunshot initiative, committing over 2,500 mini-grids to be built over the next 5 years and attracting over $500 million in private capital to be able to achieve that.
Okay, so you talked about attracting investment, but I do know that many grids face a major problem, which is significant subsidies. They do need subsidies to be able to, operate, especially because they're not really financially viable. Look at the fact that if you talk about the rural electrification, not a lot of these people have, the purchasing power to pay for this electricity, or some of them don't really need electricity much. They probably just use bulbs in their houses. So how do you think investors are going to be able to recoup their investments that they make in in this mini-grid industry in Africa? How do you plan that, or what's your projection for recouping investments and profitability for those investing, and also ensuring that power is stable in these rural areas?
I think first, like the Nigerian situation where the regulations have been clear and have been private sector driven, first that has to happen across other parts of sub-Saharan Africa. This will help this industry and incentivize more private capital to begin to enter these markets at scale. Then we also need to look at logistics and the supply chain and increasing local manufacturing and assembly, because a lot of the components that we require to generate power are not manufactured in the continent. Then we also need to look at local currency financing mechanisms that are cheap and affordable and long-term. That is the way we can then say, such patient capital can help to begin to look minimize the cost for rural dwellers and make this power affordable. There also needs to be collaboration and an ecosystem that agrees to come together to work for the rapid development of project pipelines. This has to happen with various stakeholders across regulatory and policy as well. So that is the way that we can ensure that scale and the affordability and provision of this reliable power to rural dwellers happens. Without these things, then we might still be, looking at a long term for achieving these rural electrification goals.
Thank you so much, Olu Arike. I do hope this project, gets fast-tracked really quickly, because Africa does need this electricity and we can't always stay in the dark. Thank you so much, Olu Arike, Nigeria Country Director for HUSC, for joining us on Business Incorporated.
Thank you.
Now, in the face of potential threats to African currencies and rising borrowing costs in more developed economies, central banks across the continent are expected to hold their current interest rate steady in the coming weeks. However, the possibility of rate hikes still lingers, particularly in response to internal issues within their own borders. South Africa, Egypt, Morocco, and Ghana are among the nations anticipated to keep their rates unchanged. These countries are grappling with economic uncertainties and challenges, making this period crucial for setting their near future economic course, while Nigeria, Angola, and Kenya are expected to increase their borrowing costs. Now, Egypt and France have agreed to develop bilateral ties and expand them in a way that serves their joint interests. President Abdel Fattah el-Sisi, while receiving the French Minister for Europe and Foreign Affairs, Catherine Colonna, on Thursday, says Egypt will continue to exert efforts to reach political and peaceful solutions to existing crises, which will in turn contribute to restoring regional security and stability. The spokesperson for the French presidency says that both sides confirm mutual keenness to enhance cooperation in the area of transport and the global rise in the prices of food and energy. Now we go to South Africa, where the Deputy Minister of Trade, Industry and Competition, Ms. Nomalingo Gina, says it's important to increase and diversify South African exports to Vietnam in order to cover more value-added items. She was addressing a roundtable on Vietnam-South Africa Economic Cooperation on the occasion of 30 years of diplomatic relations between the two countries under the theme Vietnam Days in South Africa in Pretoria today. However, some analysts have warned that the geographic distance between the two countries can increase transportation costs and lead to longer shipping times, impacting the efficiency of trade. And that's a wrap on Business Incorporated. Do join us next week for another edition. I'm Will Ibong. Thanks for watching. See you next week.